This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Brett Brohl, managing partner at Bread and Butter Ventures. Bread and Butter Ventures is an early stage VC firm based in Minnesota, the bread and butter state, investing globally while leveraging the state and region's unparalleled access to strong corporate connections, commercial opportunities, and industry expertise for the benefit of their founders. Brett, thank you for joining us.
Thanks for having me. It's fun to be here.
Great. So tell us more about your background. What did you do before investing in early stage companies?
I was an early stage entrepreneur. So most of my career, I was a startup CEO. Never actually thought I'd get into the investing side of the world. I ran several companies, both venture-backed and bootstrapped. So I kind of did it both ways. I've had a few successes, but also ran a company right into a brick wall. And so kind of have experienced a broad array of the entrepreneurial experience.
Great. And so what excites you right now?
I mean, from the investments, I love entrepreneurship in general. Entrepreneurship is what gets me going and what makes me wake up and have fun every day. I love the entrepreneurial journey. I love everything about entrepreneurship. Specifically from an investment perspective, I lead the food tech practice for our fund. And I love food tech, the food tech space. I also built the food tech practice at Techstars, if you're familiar with Techstars. And so I built our food tech practice and have been investing for Techstars and for our fund in the food tech space for about 5 years now.
Wow, great. So what's your advice for people investing in startups, say the food tech space?
I mean, food tech's an interesting world, specifically because it's very new. It's a very new venture-backed space. The modern age of food tech, as I call it, really is about a decade old and kind of started, the venture capitalist eyes opened up when Climate Corp got acquired by Monsanto for about $1 billion. And you showed that you could have venture-style returns in food tech. And it's really come a long way since then. And so food tech is much broader. It's on farm, which is ag tech. People think about like ag tech, but to me, when we talk about food tech, I always say like it's full stack food from on farm, supply chain, manufacturing, logistics, all the way to the future of food retail. And there's like so much opportunity in it. I think like for people that are thinking about investing in the food tech world, depending on where you're investing in that stack, there are some nuances to it that might not come with other verticals. And like on farm, it's cyclical. And if you're trying to pilot a product or pilot some technology that is dependent upon a growing season, you get one of those a year, maybe two, in Salinas, maybe three. And so it's not like being able to pilot a retail tech platform where there's always retail happening and you can go in and pilot it and iterate quickly. In food tech, you might go in and be able to do one pilot a year. And so you can't iterate as quickly. And so you have to be ready to finance a company for longer periods of time. In some cases, it might take a little bit longer to make progress, but it still can work. You just have to plan for it from a financial perspective.
Right. Then on the other side of the table, what's your advice for people running startups in the food tech sector?
I mean, I'll change that around a little bit. For people that are thinking about starting a company in the food tech sector, just do it. I mean, it's an awesome time. Like a lot of people talk about how market timing is just as important as how good your team or how good your idea is. Like right now, it is a very good time to be building a food tech startup and or investing in food tech startups. There's a tremendous amount of visibility on sustainability. And when you think about sustainability, one of the biggest contributors to carbon is the food system. And so when you think about sustainability, oftentimes the solutions live in food, or a lot of solutions to help move to carbon neutral or even carbon positive live in food. And so it's hot right there. The pandemic created some increased visibility to the food system as well. And so enterprises are adopting technology in the food space much faster than they ever have historically. So if you're trying to do enterprise sales in food, it's a great time. More and more funds are starting to invest in the food system. So there's more capital than there's ever been for food tech founders. So if you're a founder in the space, like we're thinking about becoming a founder, just start your company, get out there and make it happen. Start trying to build something because there's a lot of opportunities in the food system. It's still very antiquated. So go build it.
Great. Well, let's talk about the state of investing in the food tech sector. How do you see it evolving from here?
I mean, what you've seen over the last year or two is there was just a small handful of funds that had specific thesis around food tech. And what you're seeing right now, and will probably continue for the next year or 2 years, is some of the generalist funds and some of the really big generalist funds are starting to create a food tech, as a thesis area or an area that they're interested in investing in. And that's just great news for everybody because it brings more money into the system. It's easier to get follow-on raises. So I think that you'll see that trend continue. The other recent trend in food tech is the majority of the large enterprises in the space are spinning up CVCs, or corporate venture capital funds. And so you'll see more corporate venture capital come in, and that tends to be cyclical. But over the next couple of years, I think we'll see more of that from a financing perspective. And then I think you'll see it get more and more acquisitive as these big enterprises start to adopt technology at a more rapid pace, which is what we've seen over the last 18 months, kind of in line with the pandemic. Once they start adopting this technology, they get more comfortable with it and start seeing more acquisitions come down through the pipeline over the next 2 to 3 years. It'll be interesting to see where the acquisition path comes from. Is it traditional tech giants like Google, who's very interested in the food space, or is it coming from the legacy food system companies like a General Mills or like a Cargill or some of those big enterprises? The answer is probably a combination of both, but that'll be something that I'll be curious to see.
Great. And so what do you think is the biggest change we'll see in the next 12 to 24 months?
Biggest change in the next 12 to 24 months? I think next 12 to 24 months it's a good question. What I'm most curious to see, and I don't know the answer, is actually where the future of food retail lands over the next 12 to 24 months with the pandemic shutting down restaurants and changing the way we shop online, for food delivery, which has been, one of the slowest areas to adopt last mile delivery and online shopping. It's growing really quickly, but it's still a really small percentage of food items purchased are online. What ends up happening there? Do restaurants come back to the way they were? Is it something in between? What's the future of food retail is probably the most interesting space to me over the next 12 to 24 months. That and robots also.
Do you see an intersection between food tech and climate change in the near future?
I think we're already seeing that. That is one of the primary places to invest if you're a climate tech investor is into food tech startups. If you're a food tech startup, even if you're not mission driven around climate, because you're making the food system more sustainable, you are also having an effect on the planet. And if you're making it more sustainable, more efficient, you're having a positive effect on the planet. And so you can make a sustainability argument for almost every food tech startup out there. There's some that maybe not so, but especially if you're in that supply chain, like on-farm manufacturing, logistics space part of the food system, all of those are sustainability. We just invested in a company that's out of San Francisco called Dispatch Goods, and they're trying to remove single-use plastics for food takeaway and food takeout by using reusable. They call themselves the reverse Amazon, and really what they are is they're a logistics company that's able to go out and collect and wash and reuse these containers that you can use for your food. And so there's a tremendous amount of overlap between sustainability and food. It's a great place to be investing if you're interested in climate change.
Great. So tell us more about your investment thesis for this sector. What exactly is it, and what's your criteria for investing?
Yeah, we do. We're a pre-seed seed stage fund. So pre-seed seed stage fund, we usually write about $500,000 checks into a round. We'll lead rounds. We'll also follow and syndicate with other larger investors, depending on how big the round is and what the company's needs are. We will invest pre-revenue, but not pre-product. So product and market, users, people hitting it. Most of our investments do have some revenue, but small amounts of revenue at the time of our investment. And again, it's really across the entire food system, from on-farm, supply chain, manufacturing, logistics, all the way to the future of food retail. The one thing that we don't invest in is consumer products. So we're not investing in the next CPG product, whether it's a oat milk or a granola bar. We're not investing in the next round of CPG products.
Right. And can you talk about one or two startups that you funded that fit that thesis?
Yeah, we just talked about Dispatch Goods a little bit. Is one recent investment that we've made. Another company that we've made an investment in is a company called Trive. And what they're doing is they're a fintech startup that's focused on the agricultural world, specifically in Latin America to start. But they're making access to capital a lot more efficient and effective for large medium farms in Brazil to start. They'll be in the United States probably by the end of 2022. And really what they're doing is they're pulling in a tremendous amount of data and helping and making better credit decisions. The future state of the company is to become the lender themselves and become a bank themselves. Really interesting. They're performing quite well. It's a huge problem. There's just so much inequity in capital markets for farmers because lenders don't have good data. They don't understand how to make a good credit decision still.
Great. Well, you see a lot of startups and investors in this space. What are the challenges in this space for the startup in the food tech sector?
I think that's still, like, relative to other sectors, there's still less capital than many others. Like, if you look at the interest of investing in fintech versus interest in investing in food tech, fintech has significantly more capital available to those founders than the fintech world has. And so access to capital still can be difficult. And then I think that the other, we touched on it at the very beginning, but depending on where you sit in the food cycle, in the food system, it can be tougher to iterate just because of production cycles, planting cycles, seasons. So it can take you longer to build and scale than it might where you can really rapidly iterate just because you don't have the opportunity to get clients to use it, bring it back and then use it again because you have to wait until another growing season starts. And so that can be a real challenge for food tech founders. And I think just visibility. Again, it is a rising sector. It is a up and coming sector, but still not like one that everybody talks about and everybody invests in yet.
And then on the other side of that table, what's the main challenge you find investors face in the food tech space? You mentioned one before about time to fruition, but beyond that, what else do you see?
It's a lot of the same challenges. I mean, like as an early stage investor, I worry about where the follow-on capital is going to come from. Our fund is a relatively small fund still, and we don't have enough capital. We don't have $1 billion of assets under management, and so it's we can't fund company round after round after round ourselves, and so we have to be great at helping our startups find that next round of capital. And so there is additional financing risk for us versus in some other verticals where there's plenty of capital as long as the company performs. Like we have some companies that we feel like are performing and they struggle a bit more than in some other sectors to raise a Series A, Series B, Series C, just because there's not quite as much capital out there for it. And so we worry a little bit about the future financing risk on our side. The other piece is like, from a how do you exit in this world? There haven't been a lot of $1 billion plus exits in the food tech space yet. Part of it's because it's only 10 years old, it's a decade old, and it takes a decade to build those types of companies. But part of it is just because historically the companies that are in the large enterprises, they're really old. They're generational companies still. And they're not the Valley-based tech firms that are super acquisitive and will take companies out all the time. And so it'll be interesting to see how that changes over the next several years and where acquisitions come from and exits come from.
Great. Well, in the food tech space, there's different sectors and applications and subsectors. If you had to pick one or two that you think are really good immediate opportunities for investors to pursue, what would you call out?
I love anything having to do with labor right now. And there's labor shortages everywhere, but it uniquely affects food and food systems. A lot of things that happen in food are manually done still. And so anything that touches labor and so that could be labor efficiency, that could be efficiency tools, that could be automation tools. It also leads to one of the other areas that we're really interested in food, which is robotics. So I love robotics right now. We've invested in multiple robotics companies, things that come in and will fill the seats of human beings that they just can't find. Like, companies can't find human beings that do a thing. And so there's a real opportunity for robotics companies to play in the food space right now. That's super interesting to me. Obviously, everybody's like familiar with alternative proteins and what the alternative protein space has done. We don't do as much investing in the biotech space as some other funds might. But what we do look at, where we have made a couple investments in that world, is what are the industries that are going to rise around alternative proteins? And so if you think about like the gold rush, the picks and the shovels, the Levi's jeans companies that, really blew up because of the gold rush. So what are those companies that are going to rise and come out of what I believe is going to be a huge market, which is alternative proteins? So what are the support industries that could also build multi-billion-dollar companies within because of alternative proteins?
Interesting area for sure. Well, in the last minutes that we have here, what else should we cover that we haven't?
I think we've done a pretty good job. Again, my thing is always, whenever I do stuff like this, I always try and tell audiences, if you're thinking about starting a company, just do it. It's a ton of fun. You'll learn way more trying to start a business than thinking about a business. And if you're not, and if you're just interested in entrepreneurship, everybody that's listening to this, I'm assuming that at least knows an entrepreneur. And if you know an entrepreneur, help them. Like, think about, like, what can you do? How can you give first? Like, how can you go help them? You'll learn a lot that way too. So give an entrepreneur a hand and help them through. It's really, really hard being in that founder's seat. And it's an incredible journey, but it's very difficult. So the more help that we can give entrepreneurs, the better we'll all be.
Well, that's great advice. So how best for listeners to get back in touch with you?
Yeah, I mean, I think all of my contact info will be posted below when this thing goes live. So please don't hesitate to check that out. We also have, if you're interested in the food tech space at all, we actually have a podcast that's focused specifically on food tech. So it's called Full Stack Food. So you can check out the Full Stack Food podcast, and we interview a lot of the founders that have made noise in the food tech space. And or if you're interested in learning more about it, that's a great place to check us out.
Sounds great. We'll include those in the show notes. I want to thank you for joining us today. Hope to be back for a follow-up soon.
Thanks all.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.